A brief definition of tax is it's a monetary charge imposed by government on persons, entities, transactions, or property to yield public revenue. Tax avoidance is the legal use of the tax regime in the country to one's own advantage to reduce the amount of tax that is payable, but the means are within the law. So you look at loopholes and use that to your advantage. While tax evasion is illegal, and this is a practice of either not paying taxes, or you're under-declaring your incomes, or you're purposely reducing or increasing on your expenses. That means you're inflating the allowable deductions according to the tax law. There are two classifications. There's the direct taxes and the indirect taxes. The direct taxes, these are imposed on the income that is derived by the person. Now, this is usually business income, employment income, property income, and it's borne by the taxpayer, by that individual or entity. Chargeable income, this is the total income that a person gets, a person meaning an entity or a company or a trust, in a year of income. Now, a year of income, as per the Act, is any 12 months ending 30th of June. Then the gross income, this is all income that is derived by a person from all geographical sources in Uganda. That is for a resident. Now, if you are a non-resident, of course, we shall only tax what you sourced in Uganda. That is, any employment that you source, any contracts where the income is paid by a resident person. So business income includes any income that you obtain from trade, profession, vocation, or adventure in the nature of trade. So the basis of determining income, income tax liability, is you'll get your gross income from all sources, from all geographical sources. Then we shall reduce it by the allowable deductions or any foreign tax paid on foreign income. So you have expenditures of both revenue nature and capital nature. So revenue nature, you have the meals, you have all of the startup costs, profits or losses, any expenditures that you incur in deriving that income will be allowable. Then for capital expenditures, we only allow if that asset is put in use in that year of income. So other capital deductions, you have things like depreciation, capital allowances, initial allowances, all those other expenses. Now, tax obligations of companies is one, you have to submit provisional tax estimates. Act states that you need to submit your first provisional return before the 6th month in the year of income. The final return should be submitted again 6 months after. According to the URA system, is you need to self-declare, to make self-assessments, okay? Which are those provisional returns. Now, those self-assessments are taken as an assessment that is given to you by, let's say, the Commissioner General. So for you to attain submission of accurate provisional returns, you must have very good record keeping so that it's easier for you to ascertain or project how much chargeable income you have in a given year. Another obligation is you're supposed to submit returns to URA. Returns, I mean, you need to submit the pay-as-you-earn returns, VAT returns, or any withholding tax returns if you're an agent. Income tax, we said, is employment income. This is income that is derived by an employee from any employment, whether past, present, or future, including any value of benefits. So it includes basically wages, salaries, payment in lieu of leave, overtime, commissions, gratuity, bonuses, any allowances of welfare, housing, medical. Now, in determining of tax liability, of course, as per the Act, it obliges the employer to withhold on the payment every month to the employee. For someone who owns less than that, you ought not to be taxed. For amounts exceeding 235 at less than 335, it's 10%, and so on. Now, for management or for any director of a company, where you're chargeable, you're taxed an extra percentage. If you earn more than 10 million, you're taxed an additional 10% on the amount which exceeds the 10 million shillings. Property income is defined as any dividends or interest, natural resource payments, rents, royalties, or any other payments derived by a person from the provision or use of or exploitation of that property. It also includes any value of any gifts that you derive, any amounts made to a retirement fund during the year of income, any amounts derived by a person that does not include amounts in both business, employment, or exempt, and any other amounts of business income under any other section of the Act.